What can I do to lower my tax bracket? Well, I have a lot to say about this because this is my wheelhouse. This is my lane. I love talking about this. And the three things we're going to talk about, again, is how do you live corporate life? How do you use corporate structuring worldwide? It is not a U.S. thing. The reason why U.S. corporate structures are the best is because there's 4 choices. In other countries, there's usually 2. So number 1, how do you actually structure your life to live corporate life? Then number 2, how do you take those personal, what you're doing for personal expenses like a vacation, turn it into a business trip? How do you make personal expenses corporate deductions, so it's actually deductible before you have to pay tax? And then the third, which I love, is the vastness of the IRS code. In the United States, it's 81,000 pages of code, and inside of that code, I'm going to talk about the investing depreciation, because investments as part of that is a huge part of lowering your tax bracket. And a lot of you invest completely wrong. The importance of structuring your finance and your income and all of your world through what I call corporate life, corporate structure. In America, you have 4 choices. You have LLCs, limited partnerships, you have S Corps and C Corps. All of them are traditionally held inside trusts. And in other countries, you have like a limited proprietary and a corporation, again, held in trust. So you have a variety, but everywhere in the world, this principle works. When you live corporate life, Kiyosaki said it the cleanest, and he has a cool graph in the Rich Dad Poor Dad book, right? That says you choose your tax bracket. You either make it in a salary, so you make money. In America, we call it W-2 money. Then you are taxed to pieces with it. Then you get to live on what's left. If you're a company, the company makes the money. You get all of the deductions and all of the expenses taken out. Then you pay tax. So the larger you can put your life right over into the expense column of the company legally. And again, what does your company have to do? It has to have a legal intent to make money. So what is the legal intent to make money? Well, it could be a direct sales company. It could be a coaching company. It could be books. It could be cattle. It could be fertilizer. It could be dogs. It doesn't matter what it is. You have got to lean in, figure out your corporate life. Now we do this. We have highly specialized people who do it. In fact, we will take people that are in 30-40% tax brackets, year 1, usually into the 20s, by year 2 into the teens, if not single digits, and by year 3, they can be down to almost nothing. And you become your own banking system within your family enterprise. So the easiest way I teach this point is companies make money because they have the legal right to do deductions. Companies make money, individuals get taxed. So if you sent me a check and said, hey, Laurel, thanks for your YouTube contribution of content and blah, 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 I'd actually send it back to you. And I would say, please make it out to one of these companies, because I, Loral Langemeier, don't want to make that kind of money because it is the highest tax kind of money. Now, actually, right in that kind of me making money is the W-2 paycheck. So am I a W-2? Yes, very, very small. And I am employed by one of my companies. But the income, the money you make, you want to reorganize it to go into a company. Now, if you're out there and you have a job, you say, well, what do? You do the same thing. Yours is more of a side hustle. You can do real estate investing as a business. You can do property management as a business, Airbnb as a business. You could do storage as a business. There's so many things you can do as a business. We'll help you figure what that is. I have doctors, lawyers, firefighters, you name it. I've got great high income employees that walk through these doors every day, and the number one thing they want is to lower their taxes. And we do that by starting corporate structure. Now, the second one is, how do you take those personal expenses and move them to business deductions? Well, again, in America, there's 81,000 pages of tax code. In other countries, there's about 3,400, 3,200 and less. It just gets worse around the world. When you take a personal expense, like I personally, Laurel, right? Me as an individual, I pay for about 6 or 8 things. I don't pay for a lot of things because I have an officer and directive benefit package for my vehicle, for my phones. Like I don't own a phone. I, Laurel, don't own a vehicle. The more you don't own, have your company's own, which is all legal. And by the way, there's education reimbursement plans, there's research and development plans, there's the Augusta rules. There are so many tax code pieces that you could be activating if you had a better CPA, but they're only going to do what they do. Most CPAs go through just to file a whole bunch of tax returns by April 15th and then be done for the rest of the year. Most of them want to make a couple $100,000, say I had a great year. They do it in about 4 months and then they're kind of done. So ours are tax strategists that work around the clock all the time, because your corporations in America file tax September 15th. You then file in October 15th. There's no more April 15th for people who are wealthy. It doesn't work. Like, you don't do that. So there's tons of deductions. You take vacations, you make them business trips. It's the ongoing joke in my family with my children. Will we ever go on a vacation in our life? I said, no. They said, you're always going to find a place to speak, a place to talk, a place to sell your books, a place to do something. I said, yes. Even if I'm out and watch my son play football, I taught the football team financial literacy. So I constantly make vacations business trips. So I don't have a vacation. They're not deductible. Business trips are. Now, before I go to the last point, I want you to subscribe to my channel if you haven't already. I want you to click that notification button. Would you please be here 5 days a week? And then really, I would love for you to binge. Why don't you just take the weekend and binge 25 hours? And if you want, do 25 hours. Oh, why not do 50 and just take 3 days and do it? In exchange for 25 hours, I give you a $750 credit that actually is credited towards whatever tuition you want to use it to in new education that you want from us. So we're excited and we love you binging, because the smarter you come to me, and I can tell you, I love the clients who finally join our community and they're almost reciting back, my verbiage to me. They talk my language. They don't say budget. They say forecast. They don't say vacations. They say business trips. I know they've consumed my content because of the way they've changed their language pattern around money. I love it. So be here and learn. Get your family here and learn. And when your kids are 18 years old, get a company. What a great birthday present, an LLC for your birthday. Like, that's what every 18-year-old should want if they want to get wealthy. Now, how do you actually leverage this vast code of 81,000 pages? Well, you're going to get a tax strategist. So early in my career, as I started doing financial coaching and financial education and business development, taxes was always the problem. So I surrounded myself by some of the best tax strategists that I've ever found. I just found another one, brought him on the team. So now we have about a team of 8, and they operate in a class by themselves. They work year round. Our tax year, and they're corporate filers, which means their whole busy time isn't in April. That's just filing extensions and getting all the sheep out of the way. Now the corporate structure really, and the corporate strategy really works, because then you file in September. You're not looking for a tax return. You're like, oh, I can't wait till January. I'm going to get a little tax refund, because you never overpaid taxes in the first place. You don't have one. Those of you paying quarterly taxes, we do our best to cut that piece out, because you don't have to. You say, well, I have to pay my estimated taxes. You have the whole year to have to do that. And you have the whole year to strategize what to do with your cash. So now let's go to the big king of the kingdom that everyone forgets, no one educates about, is investments. How you invest your money is either as a depreciation schedule or as a capital gain schedule. So stock portfolios have huge capital gains. I mean, there's no deductions against a stock portfolio. It's really difficult. You could hold it in an entity. You can do a little bit, but not a lot. The assets that you want to invest in that have a huge depreciation schedule is number one, gas and oil. You say, well, go green. Well, look at what it takes to get a lithium battery out of the ground. It's way worse than fracking, in my opinion, because I've seen them both. It is 100 times worse than fracking. So get over it. Get your tax strategy right. So gas and oil is number one. Aviation's right up there. You say, well, what do I mean by that? Not buying a fractional use of a plane. You want to buy the plane. Now, you can buy a fractional equity position, and then you get a fractional depreciation schedule back. So that is massive depreciation. I mean, me owning a plane for over a decade, just on the one plane, it was the most amazing tax planning I've ever done. Plus, I've always bought gas and oil since 1996. Next one is real estate, obviously. Water rights and mineral rights. So those are your big 5 that give you massive depreciation schedules. You say, well, how do I invest in them? And I'm not talking stocks. You're not going to go buy more Chevron stock or Shell stock. You're going to buy the capital working interest of a well that's in the ground. Now, they take millions of dollars to get out of the ground. So your $100,000, you still get a great proportional interest. So the depreciation on a $100,000 investment in gas and oil could be as high as $100,000 against your highest income, or $85,000 against your highest income. So it's a massive schedule, but it's a compounding effect. A great tax strategist looks at everything you're doing, all your corporate structure, all your deductions, all your investments, and then roll it into the right tax planning. That's how you lower your tax bracket. Hope you've enjoyed this. I love this topic. It's one of my favorite in the world. And we'll be back tomorrow. If you have any questions, go to askloral.com, ASKLORAL. Ask a question, make a request.